Let's talk a little bit about what's happening with the market and its view of Treasuries. People are becoming very nervous about what's happening with Treasuries. BlackRock is the latest to be kind of coming out and saying, look, the US market is getting ready for turn. We've had an incredibly long run. You can see some of the flow data in terms of big global central banks pulling money out of the Treasury market. The Treasury market is so big that the flow story has to have an effect into the dollar. And when the central bank is trying to hum and ha about what to do next, you've got a really difficult scenario on what to kind of construct here. What is your view of the dollar? How does it relate to Treasuries? And when you kind of pull in how divided the Fed is, how do we know what the Fed is going to do next?
Okay, so look, a couple of points here to focus on. Firstly, let's look at flows into US Treasuries. The market is making a big deal about flows from foreign central banks, so reserve holders, slowing, so they're buying less Treasuries. That is the case, but by the same token, private investors are actually picking up. So it's not as though there's a collapse of demand for Treasuries, that one is balancing the other. I would argue that the slowdown from foreign central banks is much more to do with their reserve acquisitions being less than before. So they've got less money to invest generally. So I think that's what's really driving it. So we don't think there's a big flow story there because they're balanced. As far as the curve is concerned, I think it's relatively straightforward. Well, you've got the front end very much driven by Fed policy. The long end is much more of an inflation issue. And the fact that yields have come down this year is really a signal that inflation is under control and the Fed is not falling behind the curve and will have to aggressively hike interest rates. So that's where you've got the level of the slope. The point I would make here about the dollar, and your final question, what do we think of the dollar? It's much more to do with short-term Fed policy. The market is short. I think that's what we see at the moment. We think that's a skepticism about the Fed. But if the Fed hikes in December, as we think is likely to be the case, once that becomes priced in, it'll probably take a while, the dollar rebounds. And that's our base case view of BNP Paribas.
And you see policy divergence really upping the ante in December. The Fed goes higher, and you think the ECB goes more stimulus?
We think that is the case. And so we are calling for an extension of QE from the ECB in December. But the other central bank not to forget here is the Bank of Japan. Remember, they did something quite unusual last week when they started to target the level of 10-year yields in Japan. That, as we said earlier, that opens the taps for fiscal expansion in Japan, and that may actually be a key to get inflation expectations higher. So if you put that BOJ action together with the ultimate rate hike from the Fed, it's actually a recipe for dollar-yen to ultimately start moving. You need both sides working together, but as a trade towards the end of the year, a higher dollar-yen is something we think is likely to occur.
The market feels, as you explain it, quite straightforward, yet the politics of everything just seems to be getting in the way of rational thinking. The politics everywhere seems to get in the way of rational thinking. We are in a difficult place in Europe politically, in the United States, in the UK. Japan in some ways feels very straightforward when it comes to the politics. Is it therefore the easiest one to understand, and therefore you kind of base everything around that and kind of feed everything off it?
Okay, that's an interesting question. I would probably compare Japan with the Eurozone. And the reason I would do that is because there's a lot of structural similarities between them, in the sense that both have very large current account surpluses and very easy monetary policy to try and mitigate currency appreciation, which would come with that large current account surplus. But this is when they start to diverge. The ECB is super complicated because of the structure of all the central banks. Japan has it much easier.